So nice trade in gold this morning. Steps taken. First, I look at the day chart. Price remains above the 50-day moving average, reaffirming a longer-term bullish momentum. If we look at the past few candles, so to gauge the shorter-term momentum, we see that on Friday, basically price action was indecisive. We closed as pretty much a doji candle. It did blow past the previous day's low, but it didn't close below it, and this kind of hints to me that price is not sure which direction it wanted to go that day. Yesterday, however, price clearly blew past Friday's high, giving me an indication of strong bullish momentum. It did not close above that level, but it did close above the body of that candle. So that reaffirmed to me potential bullish sentiment. That was confirmed this morning as price once again blew past yesterday's high. It did retrace back, but the fact that it didn't retrace further down into the body of the previous day's candle, I still maintain a bullish momentum. Plan for the day was look for a long setup. So moving to the 1 hour chart, we see here a 1 hour fair value gap. So I marked that off. So the plan would be, as price would retrace back down to this fair value gap, I would look to see any kind of indication of reversal. So any kind of bullish sentiment and price looking to retrace back to the upside. Let's move back to the 5-minute chart, and then let's see how price action actually played out today. So as you can see, price is basically just oscillating around this level. It does tag into that 1 hour bearish fair value gap. This level right here was the previous day's high, so yesterday's high. So price, as we noticed in the day chart, it did go past that. Again, I'm looking for price to go down to this fair value gap. Here is a level of engineered liquidity, which I'm looking for price to also engage with. And I would also look for price to take out Asia lows. So taking out this liquidity, taking out this liquidity, plus this liquidity. Once we see that take place, I will look for price to start giving signs of a reversal. We still maintain price oscillation around this level. It's just going back and forth. And then now we finally start to see a bit of bearish movement taking place. So as expected, or as hoped more than anything, price is pushing down towards that fair value gap, and there you go. You see one major candle just taking out. So here price took out Asia low, and then in a matter of 10 minutes price violently moved downwards, taking out that engineered liquidity level, and here we see price starting to reverse backwards. As price took out liquidity and dipped into the bullish fair value gap, it created bearish fair value gap on a 5-minute chart. So I marked that off. My plan is to wait until price crosses that fair value gap and closes above it. In this particular case, specifically on this candle, you see that it just closed slightly below that 5-minute inverted fair value gap, or 5-minute fair value gap. I took the decision to enter the trade anyway, simply because I see here strong signals that price is reversing. And not only that, the EMA cloud is starting to shift upwards. So I opened my long position here. I set my stop loss here right below the inverted fair value gap, and I set my take profit just under the VWAP, which usually tends to act as a level of support or resistance. This is a liquidity level, so that's pretty much the target. Again, I'm happy with a 2-to-1 or 2-to-1 risk reward ratio, so that's where I set my take profit. So unfortunately, price, though it did remain above this level, I did take a bit of heat here, but that's why you have your stop loss. Give price room to breathe. Luckily, it reversed back to the upside and continued its upward trend. And there we go. Price eventually did tag VWAP also taking my take profit level, and right at to the tick, price touched that engineered liquidity level, creating a double top before starting to reverse down. So in any case, nice trade. The take profit level was hit, and yeah, one for the books.